Good afternoon. Thanks, Moritz, for this comprehensive overview of China's foreign policy in many areas. This is complementary to what I'm going to do, which is more on the financial side. But money is a reflection of power as well of a country, and it has not only economic but as well political dimensions. And my presentation is going to come from a political economy perspective, and I will try to stick to my 20 minutes here. And by starting essentially with the 5 requirements or conditions that an economy needs to have or to issue an international currency. A large economy, China has it. Functioning financial markets. There's a debate there, but most people would say that China is not quite in that league, that its financial markets still are underdeveloped. A stable macroeconomic framework. China over the years have had stable growth, and so that you could see as a tick, yes. Stable political and institutional framework. We can criticize China's regime or China's political system, but broadly it can be seen as stable over the years. We can then discuss whether an authoritarian regime is attractive for foreign investors or not. We'll come to that. And the last point is active political promotion of the currency, which the Chinese government has started to do, especially after the global financial crisis more than 10 years ago, but in the last years, not that vehemently or not that actively. But, this is another requirement to promote your currency. There's a dilemma in international finance. I don't know how many of you have studied economics. I want to try to be here as pedagogical as possible, but the dilemma in a way tells you that you can have only 2 kind of this poles, so only one side essentially. You can have free capital mobility. Capital investment can come in and out of the country. Europe, the United States function like that. You can have either a exchange rate management or a fixed exchange rate, or you can have monetary autonomy or an independent monetary policy. Your central bank sets the interest rate. Well, in the Bretton Woods period, as most of you have maybe studied, we were more kind of in C. There was independent monetary policy, fixed exchange rates back then, but there were capital controls. Well, China has essentially not moved from this Bretton Woods regime. China in many ways still has capital controls. It controls how much capital comes in and out of the country, and this means that it wants a fixed exchange rates and an independent monetary policy, because China wants an autonomous sovereign monetary policy. And that, implies, as I said, that there are capital controls. And this is problematic because if there are capital controls, usually from a liberal perspective, then the attractiveness of your currency is is weaker, because people want to invest in a place where they can go in and out quicker. And over the past decades, the dollar and the euro were kind of free floating, so we don't have a fixed exchange rate or managed exchange rate. We have independent monetary policy and free capital flows. And that's, goes along with what Moritz as well said, a liberal regime, separation of powers, rule of law, and, all of these aspects. If I could kind of, describe the internationalization of the renminbi over the past 10 years in a graph, it would be this one, right? Which is, the renminbi started to, take momentum when, it was promoted aggressively after the global financial crisis. But after the 2015-2016 stock market crash in China, stock exchange turbulences, financial, instability, there was a lot of capital outflow of China. The Chinese authorities became scared. They restricted even more capital controls. And since then, as you can see here from Standard Chartered Bank, which has a renminbi globalization index, that the renminbi is plateauing. So essentially, we don't really have seen much momentum in the internationalization of the RMB over the past years. And that you can see in all the different functions of money, right? Money, for those again that have studied economics or a bit of economics, has three main functions. Medium of exchange, we use it to exchange goods and services. Unit of account, we invoice contracts with this particular currency, international contracts, etc. And store of value, where we keep our savings, right? And if we start with the medium of exchange function, which is, how many goods are traded in renminbi, as you can see here, again, you have a rise of usage of renminbi, but in this period, a collapse and, a bit of recovery, but still overall, the share of Chinese goods that are, settled in renminbi is around 22%. And this includes actually Hong Kong, which is 80% of all the trade of China in renminbi. And therefore, that means that even the usage of renminbi in China's international trade is quite small. And we can see that as well in the foreign exchange market, right? The currencies we use when we want to change to another currency, right? And here the dollar is by far dominant. This is out of 200, okay? It's not because you have always two currencies. When you exchange, when you go to the foreign exchange, you want another currency, you go, so you have a pair. So it's out of 200. And as you can see here, the dollar is way dominant. And then the euro and the Chinese yuan is even below the Swiss franc in the foreign exchange market. So a very small percentage of global trade. Here you can see it as well in global payments, where the renminbi, this is just another graph, hovers around 2% of global payments are done in renminbi. And again, here, this is below the Japanese yen, even before the Canadian dollar. So a very minor kind of role of the renminbi in global payments. As a unit of account, so how many contracts are invoiced in renminbi? This particular element is difficult to grasp. There are not good data because this is very micro. It's essentially the contracts that companies sign, and that's really micro. And here, what we can see is that when it comes to Europe and how Europe trades, the European Union trades, and how it invoices trade, as you can see in imports, we settle or kind of sign contracts mostly in dollars, right? Because these are goods that are coming from around the world, and the dollar is dominant, and a bit more than 1/3 in euros. And when it comes to export, where we have more pricing power, where we can actually say, no, I want this contract to be my currency, roughly 50% of our contracts of trade are invoiced in euros, and the United States dollar is 34, and other non-EU currencies are this, and other currencies which would be the renminbi is here in this. So we are talking on a very small, because these are really all the other currencies, and therefore the renminbi must have a very small role there here. When it comes to unit of account, we are as well looking at the anchor, because a lot of countries, they link their currency to another currency, usually the dollar, but not only the dollar. I mean, the euro could be, especially in French Africa, Francophone Africa, etc. There's a lot of currencies that are linked to the euro, right? And the view is, the renminbi will only become an anchor in its region when you have a more independent central bank, which it doesn't have. Still, the government controls the central bank in many ways, doesn't really have the credibility, and it controls as well the exchange rates, and that is problematic. But lately, the Chinese authorities have started an oil futures market, because one of the key commodities in the world that is very linked to the international currency is oil, right? One of the most traded commodities in the world, and mostly, of course, in dollars. The Chinese know that, and so they have started a futures market, which has increased its importance. It's now roughly 10% of the overall trade in oil that is now invoiced. Again, unit of account, invoiced. The contract is in renminbi. That's still kind of I mean, for the size of the Chinese economy, still not at the level that it should be. And as I was saying here, there's the anchor role of the Chinese currency, and there the IMF has said that okay, the Chinese authorities, they are still intervening in the currency. As I said, it's a managed currency, and as you can see here, the assessment of the IMF is, look, the Chinese authorities, they intervene in the short, on a daily basis, although they let the currency kind of take a more kind of market approach in the medium to long term. As a Chinese official told me, at the end of the day, the Chinese authorities, they don't really believe in free markets or fully floating currencies. They believe rather in administratively managed market equilibrium, right? Which is, I mean, Moritz was kind of talking about the Chinese way of, Chinese characteristics here. It's, it's the same. I mean, the market, let alone, is too unstable, so there's always an intervention, administratively managed market equilibria or exchange rates. When it comes to foreign reserves in central banks, here we see as well that the Chinese currency has a very, very minor role. Kind of 5 years ago, it was still at 1% of overall foreign exchange reserves. As you can see here, the US dollar by far dominant, and then the euro. 5 years later, in 2019, it was 1.94. So you could say it has doubled, but of course from a very low base. In 2020, the last numbers we have, it's still at 2%. It's increasing. I mean, remember that we started at 1.8, but still for the size of the Chinese economy, this is very, very small. And of course, again, the Chinese RMB is even below the Japanese yen. And China has overtaken the Japanese economy in size more than 10 years ago, right? On the store of value side, we are talking here mostly about financial markets, where you could invest, where you could put your savings. And the financial markets in China are developing from a lower base as well, but you have, bigger government bond markets, debt markets, you have corporate bond markets. As you can see here, this is evolving. We have as well here, the strategy to combine Shanghai, Hong Kong, and Shenzhen together, which would be a stock market that is the second in the world after the New York Stock Exchange. So, it's a large market. In all this, the real problem is, again, that this is a market mostly for Chinese. As I said before, there's control of entry of capital in the Chinese market. As I said to you, the Chinese believe in the Bretton Woods arrangement of managed exchange rate, control of capital flows, etc., and therefore they limit who, so institutional investors mostly, and how much they invest in the financial system, either stocks or bonds. Then, of course, we have the foreign direct investment. So this is not kind of portfolio investment. This is more long-term foreign direct investment. And here you can see that over the years, the investment in China has been large. And in the last year, for the first time, China had more foreign direct investment than the United States. This was due to, of course, COVID, there's fast recovery in China being quite attractive in that regard, and the United States being in a bigger crisis, and Trump scaring perhaps foreign investors. And for the first time, China has had more foreign direct investment. How much of that foreign direct investment is in RMB? It's not so clear. The data there not very strong. So to sum up, you have a Chinese currency that, in all these levels is rather small. This is the last line. And as you can see here, this would be trade in terms of trade volumes. the Chinese currency compared with the dollar, it's really down here. But money is not only, as I said, economics, it's as well, geopolitics. Maurice, has already talked about the Belt and Road Initiative, this major project. And the idea is, well, maybe China is not doing it the liberal way, not the market way. It's doing it more top-down, command and control, dirigist from a French perspective. And, this mega project has, of course, trade, but for some, even, we are here in the École Navale, military dimensions. Here, Hambantota in Sri Lanka is, a point to take into consideration. The military base of China in Djibouti, so this is a major geopolitical project. And in that regard, one could think that China could promote its currency more in a top-down command and control approach. And the Chinese, they always say that development comes with motorways. You need to bring a road to a place to develop that place. And so I highlight now 3 possible motorways. You call them as well pipelines that China has produced over the years to kind of make the renminbi more attractive. One is currency exchange swaps with central banks, where the Chinese central bank has swaps with other central banks. Here's the list. It's a long list, but not many of those. Only Argentina and Mongolia and Hong Kong have activated them. You can see here that China has more currency swaps even than the United States, than the Fed or the Japanese or the European central banks. But as I said, these are just roads. They are not really filled with cars yet, right? So they are empty roads really, but the roads are there, right? Motorways. Then you have the cross-border interbank payment system of China. What is that? That's maybe you have heard of SWIFT. It has been pretty popular in terms of the Iran kind of deal and how the United States withdrew from it and then imposed sanctions on everyone that was trading or doing business with Iran. And SWIFT is the dollar-based international banking payment system. Again, pipelines, right? It's the payment infrastructure. Well, China has now created its own infrastructure, mostly for Chinese banks, but you have as well other banks going in. This has picked up quite a bit, again, from low numbers. A lot of it is really Chinese banks or banks that do business with China and other parts of the world, right? So, but, in terms of trying to create motorways parallel to those of the dollar, we are seeing some motorways here as well. And here you can see that mostly Japanese, because of the, close relationship and trade, a lot of Japanese, a lot of Russian, a lot of Taiwanese, well, the usual suspect banks, they are using more this payment infrastructure by China. And the third motorway that I think is interesting to look at is, of course, something that came up quite a bit in the news recently. It's the e-yuan, or the official number, the name, which is digital currency electronic payment. So this is the digital sovereign currency of China that China is promoting. It started pilot projects this New Year's year. In China, the central bank sent gifts, so electronic money, e-money, to a lot of customers or citizens in China. We know that in China, there's a lot of digital payments, more than anywhere else. We know as well that, Alipay and WeChat, these are platforms, social media platforms, but not only that. I mean, you can do a lot of things. This is almost like Google, Facebook, Amazon, and all in one. And a lot of people are starting to pay with the money that they have in the bank account through these platforms. But at some point, these platforms could use the sovereign e-yuan of China in terms of payment. And the customer base is huge, even larger than of course the Chinese. A lot of people use WeChat in a lot of parts of the world, and so they're talking here about almost 2 billion people that in principle could start using Chinese mobile payment systems in the world. And you have here, how much the Chinese, and also 80% of the population in China is using already kind of the mobiles. They pay everything with the mobile. So in that regard here, one could say that China has a technological and social kind of advantage. And it is said that the Chinese central bank is the most advanced in that realm, right? But of course, the Fed and the European Central Bank are now thinking about as well issuing some sort of digital currency, and we will see some rivalry as well in the digital space between currencies. And so this is the third motorway, which is here you can see the coin. Of course, now there's a lot of talk about it now that Bitcoin is very, so this is not, this is digital sovereign money, different from Bitcoin, but it is important to analyze. But all of this relates to having motorways, but the key is how many cars will use these motorways. And so far, as the numbers show, there are few cars using it to make the RMB really a competitor, not only to the euro, but I would say even to the Japanese yen. So the Japanese yen still kind of is a more international currency than the RMB. So China is a global economic power. One could say even military power, but in terms of currency, it doesn't really have a currency too much, that particular power.